Happy Tuesday, everyone. I hope everyone is having a wonderful week so far. And we're going to dive into the current lending programs that we have here at Credit Suite and be able to go through those. And I'll be very mindful of everyone's time as we're going through these. So excited to get to go through this. I'm going to go through it in both Credit Suite's Suite login site that you would see as a partner, and then also how you can see this in Fundability. And then you also have access to see that in your back office in Fundability too. So first of all, let's go and look at it. So if you want to follow along, you can definitely go to suitelogin.com. Go here to the partner resources, then your resource library, and then go over to the finance resource category and go to the funding program cheat sheet. So the funding program cheat sheet, this is something that you'll want to review if you have any clients that are wanting direct lending. Then I'm going to touch a little bit on too, how you would enter in a client that wants to have that direct lending. If you have a client that you put in for the Business Credit Builder program, you put them in Suite Login, or if you add them in the Fundability software, they do have access to go over the direct lending options, which would be what we call the 3 C's: collateral, cash flow, and credit, which would be anything that's listed here in the funding program cheat sheet. When it's a Fundability client, they're going to be able to see that right in their business funding tab. So they'll be able to see all the different types of lending and the basic pre-qualifications for that right in their business funding tab. It's something also that the advisor team is going to go over with them on a welcome call. They're going to go over what we call the 3 C's: collateral, cash flow, and the credit lend hybrid. Now, let's take a step back. If you're wanting to sign up someone and just for the direct lending portion of it, and then only to look into that, they don't have the Business Credit Builder program. And if you're in the Suite Login, you go to your Add Clients. If you're in Fundability back office, you would go to the Lending tab, and that's where you would enter them in. Both are pretty similar. To not make you guys dizzy and going back and forth in 2 different sites, I'll show it in here. So if you were adding them in and they just want lending, they didn't sign up for the Business Credit Builder program, you would go here to the Add Clients tab, the Finance Blueprint only, enter this in, and once that gets submitted, the finance team is going to reach out to that client to go over the best lending options with them. What we do ask though, let's go back over here to the funding program cheat sheet. What we do ask before you put them in for that, make sure that they have at least pre-qualification for one of these types of lending. So let's walk through some of these. I think a lot of people are pretty familiar with the credit lend hybrid. That's going to mirror how someone's handling their personal credit to what they can get for business credit cards. It does have the 9.9 success rate fee. It does require a personal guarantee. The amazing thing on this program is someone can do it and be brand new in business. So that's a huge plus for the credit lend hybrid. Now, when it comes to cash flow, there's going to be many things that are included in cash flow. More and more right now, what we're seeing, if a person has less than 20,000 in monthly gross revenue, and that would be consistently each month in the last 6 months showing at least 20,000 or higher in monthly gross revenue, their options of being able to get cash flow financing is going to be pretty limited. Let me jump over. I see a question we have here. How do we protect our clients and how much do we get paid? So when it comes to protecting the clients, I might need you to reach out to the advisor team. We can kind of talk more about that because I need a little bit of clarification to answer that part. Protecting the clients, I'm not sure if you mean that by fees. And when it comes to what you would get paid, let's jump over to that and go to the partner resources, resource library. And you're still going to go down to the finance resource category and here in the funding commissions. That's going to give you a breakdown there of what is commissions for different types of lending. So that'll give the breakdown listed right in there for you. Okay. And then when going back here to the funding program cheat sheet and talking about cash flow lending, for cash flow financing, when you're looking into that, we do have it that there is options if they're making only $10,000 each month in monthly gross revenue. But the part that is going to really play into that is making sure it's consistent. Their foundation for that business is strong, right? And that the client's being realistic, that if they're making $10,000 or close to $10,000 each month in the last 6 months, they shouldn't be expecting a huge loan amount back, an excellent rate in terms. What we find is if the client comes in with the correct expectations, they're going to be more successful because they're going to know, okay, yep, I'm probably going to get a daily payback if I'm making $10,000 a month. My rate might not be as great. If they had business credit already built, yeah, they're going to have better chances of having a higher approvals, also better rate and terms. But realistically speaking, if you're making $10,000 a month in monthly gross revenue, the approval amount is going to be very close to that, especially if you don't have your business credit built yet. The rate and the terms are going to be higher also for that. So I just want to make sure that that's pretty well known. If they're wanting, well, no, I want more of a line of credit or I want a term loan. I don't want anything daily payback. They need to be making closer to $30,000 at least each month in the last 6 months to be able to get that. And that's a pretty standard. The lowest it could go is about 25,000, but even at that, they need to show some stability in the business and have a little bit more time in business to be able to show that lender that they have the ability to pay it back. The approval amounts for cash flow financing is going to be very similar to what they make in 1 month. So if they're making 40,000 and they've been doing that consistently the last 6 months, then it'd be pretty realistic to think they can get a $40,000 line of credit. And those are some things, just key things to know about what we're currently seeing with cash flow financing. Unfortunately, it has become a little stricter on what they can do. It still can go down to 10,000, but just make sure you set your client up with the thought process. This is going to be more of a starter financing. It's going to help meet the goal that you want, but the rate and the terms are going to be a little steep right now. But your goal is this. Let's help you get to this goal. And then once you get to that goal and you have that loan, these are the things you can do with that and so forth. So just wanting to make sure that everyone understands kind of where the current market is going right now for that. SBA, does require a lot more documentation. Most of the guidelines are staying pretty similar right now with SBA. They do need, the 2 years in business. and a lot more details from that, depending on what type of SBA you're looking into. Then comes accounts receivable. So accounts receivable, that is more specific. That's a common one that clients get a little misunderstanding of what accounts receivable is or not. So that does have to be something that they already have an outstanding aging report with. If a client has no clue what an aging report is, most times they're not very familiar with accounts receivable, and it probably isn't something that they're doing and have enough of those to look into that. So that definitely does just play into that too. So that of what accounts receivable is, the finance team does a great job walking clients through that if they do have that and matching them up with a lending source that can help. Purchase order financing is pretty similar too and would fall under, just like along with accounts receivable, the collateral umbrella of the 3 C's. And the purchase order financing, if they have outstanding purchase orders, the thing that I want to make sure to draw everyone's attention to, because this is what currently we can do, is that it has to have at least 200,000 minimum in existing purchase orders to look into that. And then they can definitely look into a purchase order type of lending, and the funds received are paid directly to the supplier. So that makes it really streamlined for the business to have that done directly that way. Inventory financing also falls into the collateral umbrella, similar like these other two. Not as common that businesses fall into this. The most common types of clients, what we see them wanting is either the cash flow financing or the credit lend hybrid. But I want to make sure that you guys are aware of these other options because they are still options for a business to be able to do those. Another option that would be for someone who's new in business, doesn't have maybe other types of collateral yet, no existing purchase orders, accounts receivable, aging reports, no cash flow yet, is to look into retirement account financing. So if they have a 401k or an IRA that has at least 35,000 in it, they could look into borrowing against that. So that's definitely another option for a person who's newer in business to be able to look into that. And then we also have securities. If they have those items, they can look into borrowing against that too. So there's multiple options for people who are new in business. Then when it comes to real estate, it's going to be looking at the business real estate. So it's a common question that we get. It has to have where the business items are in the business name. So it can't be a rental home that you count as a rental property for your business, but still in your personal name. So everything for this type of lending does have to be in the business name. And if you're using to purchase it, you have to purchase it in the business name. And then the collateral has to already be in the business name, entitled that way to look into that. Another type of lending here is going to be equipment financing. The equipment financing, having the equipment valued at least 35,000 per piece of equipment or greater. And then going through if they're looking to purchase equipment and want to have a loan for that, they would need 2 years in business or greater. And then having at least monthly revenue of 10,000 or higher. They've got to be able to prove that their business can be able to make payments back on the piece of equipment, showing that they do have revenue going in and out to be able to stand on that. And then going into to use for collateral, this is the one thing that sometimes causes questions. So I like to point this out. So the time in business, 2 years or greater, okay. But if the collateral, if it's something that they have had for a long period of time and they are wanting to use that as collateral, that's not going to work out the best because it does need to show that it's been purchased in the last 30 to 45 days and an invoice proving that to be able to move forward with that type of equipment financing. And then last but not least is book of business financing. It's an insurance business. If the person is in the insurance business, this one's very specific to the industry type of the business, then they're going to want to be, can look into this. They do have to have their total books supporting that and their book of business reports to go through that and be able to look into that specific type of lending. The other types of lending, which I think is a good point to bring up because it's a common question that we get, are these types of lending, what industries are for it or not for it? Majority of the industries can look into all different types of lending. Some of them, depending on the industry type, might have to have stronger overall financial picture, right? So that's why we encourage people, not just for that reason, for multiple reasons, when they're working on step one and building their business credit and setting up everything for the foundation to be successful. It's very important that a business sees the big picture. And that's why we walk them through that in step one, making sure they're seeing the big picture of it, making sure that they know what's going to affect them, their business as a whole. So when they're trying to build business credit, when they're trying to get direct lending, like these options here in the funding program cheat sheet, making sure that all of that is set up for success. And that's why the Fundability Foundation is so essential that they have that, because thinking of it from the lender standpoint, and sometimes too, business owners aren't going to have any idea about that. They're going to think of it from the way a personal lender would look at it. So that's totally fine. If they're not sure how to do that, that's what my finance team can go through with them, help them see it from the aspect of the way the business lender is going to be looking at that. It's also why, too, when you're looking at that whole financial picture, they're going to look at the business owner's personal credit, too. The personal credit score is going to play into it. A lot of the business lending types here are going to need a personal guarantee. They're going to look at the personal, they're going to look at the business, they're going to see if the business has business credit and look at that whole financial picture. So I think it's really important too that the client is aware of that. It's pretty rare we have a client come over and they think they can get business lending and not provide their social. Now, when it comes to business credit building, there are accounts that you can build and not have to put your social on it. But when it comes to the direct lending, the lenders are going to want to look at the whole financial picture there. I do see a question here about repeating about the success rate fee on credit line hybrid. And so when talking about this 9.9 success rate fee, that is going to be something that is charged to the client. So let's give an example. Say they get pre-qualified, then they decide they want to move forward with credit line hybrid. They have to sign an agreement. That agreement lets them know that there's going to be a 9.9 success rate fee going forward. And say they get 3 different business credit cards that total an approval amount of $45,000. So if they get $45,000 approved, they will need to pay 9.9% of that $45,000. That is due upon the time that they are approved for those. We've had a common question, well, what if I didn't, let's just say Chase Bank. I'm just throwing a bank out there. I'm not saying that's for sure the one they're going to get or anything. That's just throwing a bank out there. So say they get a $15,000 limit with Chase and they're like, well, I didn't really want that one. The 9.9 success rate fee is still part of that agreement that they signed, and they will still need to pay that 9.9 success rate fee if they want the approval or not. So, and that's very clear. There's a video that underwriting has them watch. They sign the agreement. They've legally bound themselves to that, right? Sign that agreement, and the 9.9 success rate fee. We do not hear people having a problem with that often. Credit lend hybrid is one of the most common types of lending that clients get through the program, and that 9.9 success rate fee is pretty well accepted by them coming into it. And I think it helps too when they know that, hey, this is doing credit lend hybrid, you're going to get a lot higher approvals than trying to do those all on your own there. And being able to look into those and see what options are going to be. If they meet all these requirements, then they would fill out an application. And then at that point, be able to see if they are pre-qualified for that by doing a soft pull. We do not do that soft pull. Soft pull is done by the underwriting company. And then based on that, they're going to be able to say, okay, based on this whole financial picture, this is what it looks like we would be able to get you. And that's where it comes into play where the client's got to agree if they want to move forward with it to the stipulations of that type of lending. Okay, so let's do, all right, looks like I got one other question here. Oh, sorry, there's a couple other questions, so let's go through those. So there's a question about people advertising business credit with no guarantee. That's talking about the business credit accounts that a person would get in the Build My Business Credit. When it comes to anything that we're offering here in the funding program cheat sheet, the direct lending, that is going to look at the whole financial picture, which would be including looking at the personal credit. And credit lend hybrid is very similar to credit card stacking. So I see that's another question that's in there. Okay, I think there's one other question too about a business loan without your personal is extremely rare. I'm not saying it could never happen, but a person has to have very strong financials to be able to look into that. And underwriting would make that judgment call at that point. That wouldn't be someone only making $30,000 a year, or I mean 30,000 a month, and only been in business for a year or two. It would have to be pretty solid financials. And, too, when talking with a client about that, have the client think about it if they were the lender. Would they be giving some business that's been in business for a year a $50,000, $100,000 loan if they're only making, 30,000 a month? So definitely would be something to set the clients up for, to have that, what's going to be best for them. And we want the clients to be successful. We want them to be able to get the financing that they need. And when we're going through it with a client, what we're going to do, we're going to go through the 3 C's with them. If some of the options aren't going to be a good fit right now, go over a game plan with them on how that's going to be a good option in the future for them. So we definitely want to be able to go through that with the clients in detail, help them know, like, okay, when you're at this point, then let's revisit. Let's look at the business lending. So anyone that has come in for even just the direct lending, we'll go through what would be the best options to look at it even in the future. Make sure that they're aware they can always call back when they feel that they're ready for that. Let's revisit it. And then when they're working on building the business credit aspect of it, and the advisor team is going to revisit that with them too, after they initially talk with them in the beginning about the lending types, and then let's revisit, because we want to help them develop their whole financial picture, right? They're going through the business credit builder part of it, setting up that foundation, making sure they're building those vendor accounts that are in tiers 1 through 4. And those vendor accounts they can get based on just their EIN. There's going to be some vendor accounts in there too that do require personal guarantee. If they haven't yet met the time in business or revenue amount. So it's good that clients are aware of that too when they're looking at it. And then coming into the direct lending. One last thing that I want to show on here, because I want to be very mindful of everyone's time before we end the webinar, and then I'll make sure to give you guys too the finance team phone number. So if you have additional questions, definitely can reach out to the finance team and we can go through those for sure with you. And when looking here at the fundability software, so here we're in Suite Login, right? And the clients would be working on their Build My Business credit that you've signed them up for. When a client is here as a fundability client, they mainly are working off this business fundability tab. They're also going to work in the funding manager tab as they're working on the different tier business credit building accounts. But in the business funding tab, they can look into the different types of lending. So let's just pull up business revenue. It gives them some basic information. And here's where it's going to go through the details, just like what you were seeing on the funding program cheat sheet. So the fundability advisor team is still going to go through with them the 3 C's like they would do with a client that's from Suite Login. The great feature about fundability is the client can follow along pretty much, right? Or if the client's in the drive-through talking with their kids, got the TV on in the background and not fully hearing what the advisor is saying, they can definitely reference this as a look back. So that's a great feature too of the fundability program, and they can do that throughout all the different types of lending that we were just talking about. So what I want to make sure to do now is that everyone will have the phone number for the finance team. So that's going to be 800-715-1306. Any questions that you have when it comes to these types of lending, the finance team definitely can help out with that. If you have just basic questions about it, the advisor team can help out with basic questions. When it starts to get into a little bit more detail about the finance programs, that's where the finance team is the expertise on that. And then they can dive in on that with you. Thank you all so much for your time today and spending the time going through the current lending types. We're excited to be able to help your clients with this in the future, help your businesses with this in the future, and just appreciate you guys joining. Have a wonderful rest of your Tuesday.